Traders who are tired of day trading but still desire high risk, high reward. Why aren't more traders doing this? Check out this simulation over at spytomorrow.com. Click on Portfolio Simulation for our high risk portfolio and enter an initial amount of, let's say, $1,000 and a position size of 10%, an average win rate of 60%, which is correct 3 out of the 5 trading days, and the number of trades, let's call it 1 year, 350 trading days. Click Simulate again, and one more time. Now let's check out the Monte Carlo, which means we're going to simulate 100 times, which will average it out. After this video, head over there and find the right combination for your risk tolerance. What the simulator represents is an overnight swing trade, taking advantage of what we refer to as the overnight gap. You've seen it. The market closes at one point and then opens either up or down the next morning. And you've always wondered, is there a way to take advantage of this? And the answer is yes. And that's the question I asked over 4 years ago. What if I could measure the pressure at the end of the trading day and see if it correlated to how the market opened the next day? It took me about 3 years to get it right. And I got it right about a year ago. And then after that, I had another question. The question was, what's the probability that the indicator will be correct, either up or down? On average, it was correct 70-75% of the time, and it still is to this day. However, some months it was only 65% correct, while other months it was 80 and even 90% correct. But how would I know the difference? Imagine if somebody came to you and said, hey, I can tell you with 70-75% accuracy whether the market would go up or down during the first half hour of the trading day. Do you know how much money people would pay for that powerful information? And here I am giving it away for free at SPY Tomorrow, 4 o'clock Eastern Time. The up or down signal is posted for you. Now let's talk about that probability number. If you have access to the membership area, you'll see the other purple algorithms as well as the purple S and the purple star algorithms, which are nice support. However, it's the probability number that really makes this special, because take a look at this chart. What it's showing is that the probability numbers are not random. They actually correlate to the probability of the indicator being correct. Let's say the probability number is 54%. Well, that's almost like flipping a coin. That means that the probability of the indicator, whether up or down, being correct is 54%, which means there's a 46% chance of it being wrong. If the probability number says 82%, well, then there's an 82% chance of the indicator being correct, whether up or down, and there's an 18% chance that it could be wrong. This is powerful because it allows us to make decisions as to how aggressive or conservative we want to be with our trades overnight. There's an important key that has totally revolutionized my trading that fits within the SPY-T style and reasoning behind SPY-T trading that is really related to how that simulator works. I'll talk about that in a moment. First, let's address our risk tolerance. How aggressive or conservative do we want to be with our trades? And there's 3 things that we can do. The first thing we can do, of course, is control our position size. Do we want to be more conservative, just trading 1, 2, 3, maybe 5% of our portfolio? Or do we want to be more aggressive, trading 10 or 20% of our portfolio? There are different ways in which people trade the overnight gap. Some people trade stocks, ETFs, leveraged ETFs, such as 2, 3, and 4 times leveraged ETFs. But for the most part, we're trading options to take advantage and maximize this opportunity. And the next thing we can do to control how aggressive or conservative we are with our trade is to consider the expiration date. If we want to be more aggressive with our trades, we may consider 4, 7, or maybe 10 days until expiration options. And we'll get bigger moves in our favor, but also against us. So if we don't like those huge moves and we want to be a little more conservative, we can look a little further out, maybe 20 or 30 days until expiration. The third thing we like to do to address how aggressive or conservative we are is by hedging. The thing is, day traders do actually have an advantage over overnight swing traders. They can place stops, which means if the market goes the opposite direction from their prediction, they can just automatically exit the market with a stop. We can't necessarily do that with overnight swing trading. So we use hedges in a ratio trade system. Let me explain. So if your indicator said up and you want to be more aggressive, you might buy 5 calls to 1 put at the same strike price. Or if you want to be more conservative, you could buy 2 or 3 calls to 1 put at the same strike price. But you can also look at this based off of price itself. So let's say your indicator said up. You could buy a call for $1 and a put for 10 cents if you want to be more aggressive. If you want to be a little more conservative, you could buy the call for $1, but then a put for 50 cents, which would be the 2-to-1 ratio. Now for that one thing that has really made SPY-T trading work for me, and that's automatically timed exiting. At the end of the trading day, I go to SPY tomorrow to check out the up or down signal, and then I take a look at the probability numbers to help me decide how aggressive or conservative I want to be with my trade. And at the very last seconds of the trading day, I place my trade, and then after, I set them to automatically exit the next morning. And it depends on the ETF or option that I'm trading, but I'm pretty consistent as to the time I like to exit. What time you might want to exit may be a little bit different. But I think for the most part, you want to do it about the same time every day. And what I recommend is you just take a look at the history. When tends to be the best time on average to exit? No, it's not going to be perfect every time. However, you won't be chasing those perfect moments. You won't get knocked out by accident and then doubling down because you think you're right and then crashing your account, when you can just do the same thing like that simulator every single day and then over time grow your portfolio. Some people do like to do what we refer to as SPY-T level 5 trading, which is basically just manually exiting in the morning, which is just fine if you are good at it. However, many of us are not really good day traders. That's why we're doing this overnight swing trade and we're automatically exiting. However, if you have good indicators that you trust and you have skills as a day trader, you may want to consider moving averages or MACD or VWAP to help support you in your exit so you could maximize your gains or minimize your losses each morning. Whether you have paid access or you use the free version on the front page of spytomorrow.com, it's always important to be aware of the overnight news. Anything can happen overnight. Unexpected news events, of course, earnings after the bell or before the bell the next morning, or even government reports such as the CPI or jobs reports. You need to be prepared for those things, and that's why it's a good idea to practice first. This isn't a try it out for a few days to see if it works kind of a thing. This I generally look at as a month-long and a year-long process. And you're going to have winning streaks and losing streaks. And don't beat yourself up day to day. Just keep going through the process. Let the odds work in your favor over time. But the best thing you can probably do is to start off by paper trading. Test it out. Understand your risk tolerance and maybe your best approach to help grow your portfolio. I've done all the hard work for you, creating the indicator and the system. So the odds and the probability is on your side. So I ask this question again. Why aren't more people trading like this? Hey, I'll see you in the next video.